In the winter of 1890, London's financial world teetered on the brink of a disaster so massive, it threatened to drag down the entire British economy. At the heart of this brewing storm was a single institution. Barings Brothers, a bank so powerful and respected that for over a century, governments treated its signature like solid gold. This wasn't just any bank. For decades, Barings was a pillar of global power. Kings borrowed from it, nations depended on it, and the gears of international trade turned through it. When Napoleon was defeated, it was Barings that financed Europe's reconstruction. Many believed the British Empire itself was built upon the bedrock of Barings' stability. It was the financial backbone of a global superpower. But as is so often the case in stories of great power, confidence slowly curdled into overconfidence, and that overconfidence pushed Barings toward a single, catastrophic mistake that would nearly unravel everything. By the late 1880s, Barings thought it had found its greatest opportunity yet. Argentina. At the time, Argentina was the darling of the world economy. It was booming. Railroads were stretching across the pampas. Its agricultural industries were exploding, and immigrants were pouring into the country, full of hope. Newspapers in London hailed it as the next America, and investors were desperate for a piece of the action. Barings didn't just dip its toes in, it plunged in headfirst. They issued enormous loans, guaranteed Argentine government bonds, and financed massive infrastructure projects like railways and ports. They aggressively encouraged their wealthy British clients to pour their fortunes into this South American dream. Money flowed from London to Buenos Aires at a breathtaking speed. Barings was essentially underwriting the entire Argentine economic miracle. But beneath the surface of this gold rush, the warning signs were already flashing. Argentina's political situation was dangerously unstable. Corruption was spreading through the government like a disease. Global commodity prices, which the country's economy relied on, began to fall. And then, in 1890, the bubble burst. The Argentine currency crashed. Riots and protests filled the streets. The government, overwhelmed and corrupt, defaulted on its debts. Suddenly, all those loans and bonds that Barings had so proudly issued became toxic. The assets they held were worth a fraction of what they'd paid. Inside the grand headquarters of Barings in London, a quiet panic began to spread. At first, the executives tried to hide the numbers, hoping the crisis was temporary, that it would just blow over. They held on, praying for a miracle. But the situation only got worse. Each week brought more bad news, more defaults, more financial chaos from across the Atlantic. By the autumn of 1890, the truth could no longer be contained. The numbers were undeniable. Barings Brothers was drowning in debt. It was insolvent and heading for a full-blown collapse. One dark evening in November, the most powerful bankers in London received a secret, urgent summons. They were called to the Bank of England, the nation's central bank. Behind closed doors, in hushed, grave tones, they were told the unthinkable. Barings, the institution that seemed as permanent as the empire itself, was bankrupt. The room fell silent. Everyone understood the implications. If Barings fell, it wouldn't fall alone. The consequences would be a financial apocalypse. Credit across Britain would instantly freeze. Terrified foreign investors would pull their money out of London, causing a run on the pound. Global trade would grind to a halt. The shockwave would ripple across the world, toppling other banks in Europe and America. A single bank failure had the power to bring down the economy of the world's mightiest empire. In the tense, early hours of the morning, the governor of the Bank of England, a man named William Lidderdale, made a historic decision. Barings had to be rescued, not to save the bank's partners, but to save the nation itself. He didn't ask for help. It demanded Italiano. Lidderdale gathered the heads of Britain's largest banks and essentially forced them to create a massive emergency fund. He made it clear this wasn't optional. The very survival of the British financial system depended on their cooperation. Together, they pledged an astonishing £17 million, an almost unimaginable sum at the time, to cover Barings' debts and prevent a catastrophic market panic. The public was never told how close they came to the edge. The next morning, the markets opened as usual. Newspapers remained calm. Life went on. But behind the scenes, everyone in the financial world knew the terrifying truth. A single institution, blinded by its own power, had come within inches of destroying the entire British economy. Barron's survived, but its prestige was shattered forever. Its partners lost their fortunes, and its reputation was ruined. The bank became a cautionary tale, a symbol of reckless risk and the dangers of unchecked confidence. Governments and central banks around the world learned a harsh but vital lesson about financial stability, oversight, and the concept of too big to fail. The Barings collapse of 1890 proved that sometimes the greatest threats to a nation don't come from war or politics. They come from powerful financial institutions making silent, dangerous bets in faraway lands. And it showed that even the strongest, most respected institution can fall not because of incompetence or ignorance, but because it grew to believe it could never fall at all. If you enjoy uncovering these hidden chapters of financial history, make sure to subscribe. You won't want to miss the stories we have coming up next. Thanks for watching.